Good morning. You're watching Market Cafe with me, Shreyanshi Singh, and my co-anchor Snehi Shah on ET Now. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe and tell you what the brokerages are saying and which stocks you should keep on your radar this morning. But as we get started, Snehi, what is the handover looking like from the international markets?
Well, Shreyanshi, not much happening. Rather mixed moves coming in from Wall Street, and Nasdaq is the one index that has been spooked by tech earnings. So future tied to the tech-heavy Nasdaq fell Tuesday night after a pair of mega-cap tech companies posted their quarterly results. Now, Wall Street also looks forward to Fed Reserve's decision on rate policy. Remember, in Indian time, we will be getting this policy decision close to midnight tonight, so watch out for this. And in after-hours trading, shares of Alphabet dropped more than 5%. Microsoft also slipped nearly 1% after the tech giants posted quarterly earnings. To be sure, both companies managed to beat on both top and bottom lines. However, ad revenue for Alphabet came short of analyst expectations. We'll obviously throw more light on this later in the show as well. And the tech sector, which was powered by the market rally from 2023 into 2024, is now trading at a relatively high valuation of nearly 29 times its 2024 earnings. So keeping this in mind, now investors will need to see earnings expansion in order for these tech companies to be able to maintain their elevated price to book levels. Now, this action follows a mixed day for intraday trading of stocks. On Tuesday, the S&P 500 inched down by just 0.6%, so rather flat moves coming over there. Nasdaq was the one, like I mentioned, that lost the most, 0.8% downtick coming out. On the other hand, the Dow was the outperformer, adding almost 0.4% to its rate. Now, the Fed's rate decision will be in front of the mind for traders on Wednesday. The Fed funds future market has priced in a nearly 98% probability that the central bank will leave the rates unchanged according to the CME Fed Watch tool. Now, investors will be looking for clues on shifts in the central bank's policy stance in its post-meeting statement and in Fed Chair Jerome Powell's remarks. So, while rates are not expected to move, all eyes will be on the Fed Chair's remarks, their stance going ahead, and the outlook and what they plan to do with interest rates in the coming year. Now, on the earnings front, Dow member Boeing will be releasing its results Wednesday before the bell. Chipmaker Qualcomm is scheduled to announce its quarterly earnings after the close as well. So watch out for both of these stocks. And well, that was the handover coming in from Wall Street. But let's focus and look at European markets because all I can see is green on my screen when it comes to Europe. European markets gained on Tuesday, marking a fresh 2-year high as investors digested preliminary fourth quarter gross domestic product figures for the Eurozone. Now, the pan-European stock 600 ended up almost 0.2% higher at its highest level since January 17, 2022. So that's like almost last year. 2 years ago, the Eurozone economy stabilized in the fourth quarter of 2023, according to flash figures published by the European Union Statistics Agency. Now, the flat reading showed the bloc narrowly missed a shallow recession following just a 0.1% fall in the third quarter. But when we look at European indices, you've got DAX that's up 0.2%, FTSE up 0.5%, CAC also up 0.5%, and Stock 600, like I mentioned, almost 0.2% higher coming over there. So, positive handover coming in from European markets, rather mixed coming in from Wall Street, Shreyanshi. All eyes will undoubtedly be on that FOMC meeting.
Absolutely. And when you look at oil as well, what we've seen is oil prices have largely dilly-dallied on news flow. So when you look at yesterday's move, oil prices rose after the International Monetary Fund boosted its global growth forecast for the year, and as the market waited to see how the US will respond to a deadly drone attack on its forces in the Middle East. Now, when you look at the WTI contract for March, that gained about $1 and was up 1.35%, settled around that $77 a barrel mark. And when you look at Brent as well, that rose about 0.6%, settled at that $82 a barrel mark. Now, WTI and Brent are up 8.6% and 7.5% respectively this year. And the International Monetary Fund on Tuesday raised its forecast for the global economy on unexpectedly strong growth in the US and stimulus in China. So we've seen that sort of play out for the oil market as well. And the two benchmarks were down more than 1% earlier in the session. And this was after Saudi Aramco paused plans to raise its crude production capacity to 13 million barrels per day, raising questions about the future supply and demand picture. Traders are also monitoring how the US will be responding to a drone strike that killed 3 of its troops in Jordan on Sunday, like I mentioned. President Joe Biden held Iran-allied militants in Syria and Iraq responsible for this particular attack. But let's see how this pans out for the oil market as well. But when you look at gold prices, they climbed to a 2-week high and they were supported by a softer dollar as well as lower treasury yields, while focus also turned to the Federal Reserve's policy meeting for insight into how soon it will cut interest rates this year. So let's see how that also pans out for the gold market as well.
Well, absolutely. Let's take a look at all the important events also that you need to be keeping on your radar for today's trading session. But before that, we're just getting word that we've gotten figures for China's manufacturing activity. Now, that has just come in. That was due to come in anytime now. So that's just come in. We'll get you more details as and when we get the numbers. But shifting focus then, let's look at some corporate action then today. The Zee-Sony merger emergency arbitration hearing will be happening in Singapore today. So watch out for how that impacts the stock. The stock has seen quite some volatile days in the last few days, so we'll see how that pans out. Then Chambal Fertilizer share buyback will be closing today, so watch out for that counter. The board of Pesalo Digital will be meeting to mull a bonus issue today, so we'll see how that impacts the stock. And Go First lenders have set the date today to seek investor bids. Today is the last day for that as well. So we'll be watching out for all of these stocks in trade. And today is the last day to buy stocks of two companies to be eligible for their dividend, and that's Metro Brands as well as Poonawalla FinCorp. When we should focus to the primary markets then, today is the day 2 of the BLS e-services IPO, so watch out for that one as well. And the lock-in period ends for two recently listed companies, Cello World as well as Honasa Consumer. And when it comes to other events then, the ECB chief economist Philip Lane will be speaking in Rome, so we'll be watching out for that commentary along with the commentary coming in from the FOMC today.
Absolutely, and on to some more news and updates then. Earnings action ensues on Wall Street on the back of Alphabet and Microsoft results. Both companies delivered a beat on their top and bottom lines. Alphabet reported its fastest quarter for revenue growth since early 2022, performance largely driven by YouTube. Meanwhile, Microsoft as well outdid analyst estimates in their fiscal second quarter earnings. Company called for fiscal third quarter revenue between $60 billion and $61 billion. Earnings beat fails to woo investors as both stocks extended losses in after-hours trade.
Well, let's keep it with tech then, and the world's largest sovereign wealth fund from Norway has recorded a record profit worth whopping $213 billion in 2023. The figures largely aided by the rally in tech stocks, and the government pension fund Global marked its highest return in kroner ever, with the fund's return on investment last year coming in at 16.1% for the year. That was 18 bips lower than the return on fund's benchmark index.
And global coffee chain Starbucks reported an otherwise weak set of earnings for fiscal first quarter. Revenue for the quarter came in at $9.43 billion, below the expected $9.62 billion. CEO Lakshman Narasimhan said the chain faced headwinds, including a US boycott and a more cautious Chinese consumer. Stock extended gains worth over 2% in after-hours trade.
Well, in global payments giant PayPal announced that it will be laying off 9% of its workforce, amounting to almost 2,500 jobs. The cuts will affect both existing roles and job listings that the company had planned to hire for, and will take place over the course of the year. Now, affected employees will be notified by the end of the week.
And the International Monetary Fund sketches a brighter view for global macros. The lending agency has upgraded its outlook, envisioning resilient growth led by US and easing inflation. It now expects the global economy to grow 3.1% this year, unchanged from 2023, but better than the 2.9% it had predicted for 2024 in its previous estimate in October. Meanwhile, it has raised its 2024-25 GDP growth forecast for India by 20 basis points to 6.5%, although it continues to trail expectations of Indian authorities. Similarly, the fund has also raised its growth forecast for 2025-26 by 20 basis points to 6.5%.
Alright, with that, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at the Asian markets and also bring you more data on China's manufacturing activity. So stay tuned. Hi there, welcome back and thanks so much for staying tuned to Market Cafe. You're watching ET Now. Now, with less than 1 day to go for the all-anticipated interim budget, apart from the key announcements, market participants will also be eyeing market moves, flows and valuations. So let's go across to my colleague Sharad to understand moves since the 2023 budget. Sharad, take it away.
Well, it's a very interesting research we have got for you, and this is regarding the budgets and the markets. Let's look at how the volatility has actually played out on the budget day. And this has risen since 2019 and of course coming at almost a 4-year high levels for 2023 as well. Now also, if you look at the volatility numbers, they have also increased the highest when it comes to the year 2019 as well. But now let's look at how the valuations were there last time's budget and this time's budget. And of course, we have taken a 12-month forward P ratio for Nifty. Last year it was roughly at 18.3 times. This is on the higher side currently, trading at 19.6 times. But overall, there's a lot of data set coming in since the last budget, how things have changed. And three important things: rupees depreciation happening of roughly 1.7% against the dollar, while the top sectors which have performed well, we are having PSBs, energy and the realty pack as well. But overall, most of the major sectors are trading in green. Now, how the FIs and DIs have moved, and of course, you see the FI numbers coming actually on the higher side when it comes to sales, roughly 10,713 crore rupees. And while the DI, if you see, that's the number, that's the liquidity which we are getting in the markets from the DI is almost 1.7 lakh crore. So that is a good contribution coming in. But now let's look at how the indices have performed, the broader indices as well as the benchmark indices. Nifty giving 23% returns, while Nifty Bank coming on the lower side 12%. But look at the broader indices, mid cap, small cap, giving more than 50% returns since the last budget. Now also there's an interesting analysis we did on a 30-year trend basis, and over here we have taken the data for 30 days before the budget and 30 days after the budget, and there are 15 instances, out of which twice they have gained in both the occasions, while 13 times it has been on the decline for both the times for our calculations. So very interesting development coming in. But yes, the valuations are on the higher side when it comes to the Nifty in this budget.
Absolutely. Thank you so much for that roundup, Sharad. But switching focus then, market regulator SEBI is likely to look into Zee founder Subhash Chandra's statement, where he said that the promoters of Zee will increase their stake in the company to 26% from the current 4%. Reacting to the development, Zee also said that the company cannot confirm or deny the report. Ankur Mishra is standing by with more details. Ankur?
Yes, the statements given by Subhash Chandra may not have gone well with the regulator. Sources close to the matter have informed us that market regulator SEBI is probing whether or not that is a violation of LODR regulations, meaning if at all that kind of information needed to be disclosed to the exchanges first and also to the shareholders. Now, as reported earlier by ET Now, the exchanges had asked for a clarification in this matter, and in a response to the same, Zee Entertainment has said that it is not aware and it cannot confirm or deny whether SEBI is probing into the matter. The company also said that board is not aware of any such kind of development. Now remember, SEBI is already probing a separate case against Subhash Chandra as well as Puneet Goenka, and in that manner an interim order had already been passed. Now SEBI is waiting to pass a final order in that case, and now separately in an interview Subhash Chandra had claimed that he has plans to increase his stake through family in Zee Entertainment from 4% to 26%. Now the questions arise whether or not that is a violation of LODR, and sources have told us that market regulator is definitely probing the matter.
All right, Ankur, thanks for all of those details. Now, remember this emergency arbitration that Zee has about the Sony merger, that will be taking place in Singapore today. So we'll watch out for the stock in trade as well. But shifting focus, let's talk about another stock, and that's Dr. Reddy's on the back of its earnings, because it's delivered a largely inline set of Q3 results. Now, India sales witnessed a 5% uptick on an annualized basis. So let's go across to my Shrishti for the fine print of the numbers. Shrishti, take us through the numbers, please.
Well, a good set being reported by Dr. Reddy's in Q3 FY24, wherein the India and the US sales has done well for the company. And in order of that, the top line as well as the bottom line numbers are above what we were expecting at ET now. The company reported a top line, that's the revenue, at 7,215 crores, and that's a jump of 5% sequentially. Onto the profit figure, 1,381 crores is what the company has reported. That's also above what we were expecting. The margin numbers are at 28% this time, and that's a little bit of moderation from what we have seen in Q3 of FY23. Talking about the factors at play, then North America sales has seen a jump of 9% on a YY basis, while India sales is also up 5% on a YY basis, and both of these numbers is what we were expecting at ET now as well. But talking about the other factors, then the company does say that the base business has done well in the US markets for them. They have gained market share in some of their key product launches, as well as in terms of the India business, then some of the new product launches has done well for Dr. Reddy's. The company's management do highlight that this time they have delivered another quarter of the highest ever sales and the robust financial performance, and in lieu of that they have gone ahead and done a capex and a fund infusion as well. They have the board has approved a fund infusion of 650 crores in one of their subsidiaries, that is Erugine Oncology, that will be supporting the capex plans of the company as well as working capital requirements of this particular wholly owned subsidiary of the company. So all in all, a good set being reported by Dr. Reddy's in Q3. Back to you.
Well, thanks, Rishti, but let's also listen into what the management had to say as well.
Yes, so our growth is also attributed to the fact that we acquired a brand named Sidmus, and is actually working really well as per the plan. The price erosion impacted that growth, and also at the same period of time last year we had certain divestitures. So actually, if you take these two out, we are in double digit already. We are aiming for double digits, and from the next quarter or the quarter after, we should see it in full swing, primarily behind certain brands that we believe that there is a tailwind and there is an opportunity to grow. Those brands should go do better than the market. In addition to that, we are collaborating with companies around the world to bring innovation to India in three areas. One, NCs and NBEs, new products better than the standard of care. The second is the OTC nutraceutical, and the third is digital therapeutics. For example, we launched Nerivio, and it is doing well. So overall, I'm expecting from the two levers, either the big brands that we have today, as well as the new innovation, to grow meaningfully in India.
All right, that's the word coming in from the management of Dr. Reddy's. Let's move on to another earnings candidate then, and L&T delivered a lackluster set of Q3 earnings. The management sounds concerns over potential cost implications emerging from the Red Sea crisis. So let's go across to my colleague Lisa, who's standing by with a down low on all of these numbers. Lisa, good morning. An overall miss otherwise, but revenue, does that look like a silver lining for L&T?
Right. So if you look at the earnings, the revenue was in line, but absolute EBITDA, the margin as well as PAT, it saw a miss compared to the estimates. Now, in the press conference, the management highlighted that the margin, the downfall in margin, the drop in margin was owing to the job mix as well as legacy projects. They did highlight Red Sea issues, and they see some cost implications arising owing to the logistic cost. But there was some silver lining because they are very confident about the outlook going forward. They said that they'll be ending the year with an order backlog of around 5 lakh crore. The order prospects stands at around 6.7 trillion, and mainly it will be led by hydrocarbon projects which they have been winning in the Middle East. And they are also confident of achieving a 20% growth guidance for the order inflow. And remember that they had given an earlier guidance of around 10 to 12% growth guidance for order inflow. So there has been an upgrade in the order guidance revision, and also they said that they'll be outperforming the revenue guidance in high teens from 12 to 15% guidance given earlier. However, the core infra margin, they are seeing
some downgrade in the guidance, slight downgrade from 8.2% to 5% to 8.5%, and it has been revised downwards from the 8.5 to 9% which was given earlier. So these are the highlights from the con call and also the results from L&T.
Right, thanks for that particular update, Lisa. Just hold on as we listen into what the management had to say, because they did say that they expect the fourth quarter to be better than the third quarter. Listen into what else they had to say.
The legacy projects, meaning the projects that we committed in 2021, etc., are now beginning to come to an end. And as forecasted last time, I said that H1 would be possibly the lowest point in margin. Thereafter, the recovery curve will start. The curve has started. We still have some distance to go. I expect Q4 to be better than Q3 and the subsequent quarters of the following year to be better than these. So as the new projects kick in and start contributing to margin and the old projects disappear, in the course of 24-25, you will see the margin profile reflecting the margin embedded in the current set of orders. So I guess over the next 2, 3, 4 quarters, you will find the margin trajectory improving. By what order of magnitude will it improve? Does it improve by this 20 basis points?
Well, all right, that's the word coming in from the management of L&T. But let's move on then. And the interim budget on the February 1st, which is tomorrow, may give some relief to income tax payers. Now, ET now has learned from sources that the Finance Ministry is discussing various proposals to maintain a balance between reliefs as well as revenue. So let's go across to my colleague Prakash Priyadarshi, who has more details on this. Good morning, Prakash. Please break the story for us.
Yes, an important development coming in as we are learning from our sources that the government is likely to provide some relief to the taxpayers in the interim budget. We are given to understand that relief could be given in direct taxes under new tax regime in order to make it more attractive. Sources are saying that tax exemption limit likely to be increased to rupees 3.5 to 4 lakh. Along with that, when it comes to the overall tax rebate, that could be increased to rupees 7.5 lakh under a new tax regime. Going ahead, sources are also saying that the process could be simplified further under new tax regime to attract, to encourage more taxpayers to adopt a new tax regime going forward. Since we are in election year, so expectation is high, and this government is also going to present its last budget before going into parliamentary election. Similar kind of decision had been taken in the year 2019 when this government had presented interim budget. So a similar kind of expectation this time as well, and we can simply expect that the government may take some kind of decision when it comes to direct taxes in this budget as well.
Well, thanks Prakash for that budget cover. But with this, we're timed out on this segment. We'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at Maruti Suzuki and Sun Pharma. They're all set to report their Q3 results. Let's also go across to Srishti, who's standing by with what exactly the street is penciling in for both of these counters.
Maruti Suzuki numbers are expected to see a decline on a sequential basis. That will be on the back of a decline in the overall volumes of the company. They were down 9% on a quarter-on-quarter basis because for quarter 3 there were a couple of challenges. As we know that the inventory pile-up was quite big. The company did give a lot of discounts so that their inventory should come down. There were plant shutdowns which did impact the production as well. So all of these factors will be at play for Maruti Suzuki, and this time the revenue is expected to decline around 11% on a quarter-on-quarter basis. 33,078 crores is the expectation there. EBITDA expected at 3,729 crores. That will be a decline of 22%, and even the margins from almost 13% that the company reported in Q2 of FY24, this time the expectation is 11.3%. And lastly, on the profit figure, we are expecting a number of 2,833 crores, and that will be a decline of 24% on a quarter-on-quarter basis. Other than that, the realization is expected to be up on a YOY basis, but we will be watching out for the management commentary, especially when it comes to the rural demand and also their entry-level car segment. How is that expected to do in Q4 FY24 as well as for the rest of the year? So all eyes on Maruti Suzuki. So decent set expected from Sun Pharma this time around, and the major push will be coming from the US specialty sales, which is expected to give a push because this time both the key drugs, that is Cequa and Ilumya, are expected to do better for Sun Pharma this time. And on the US sales front, we are expecting a jump of 5% on a quarter-on-quarter basis, and US sales is expected at $452 million. Onto their India business, there's expected to see a jump as well. 8% growth on a YOY basis is what we are expecting, and India growth could be on the back of the addition of the field force, albeit of a weak base. But talking about the numbers, this time we are expecting a flatter sort of a growth on a sequential basis on the top line of the company. 12,309 crores is the expectation. EBITDA expected at 3,187 crores. That will be a flat sequential growth as well, and the margins expected to be steady at 26% for Sun Pharma. The profit expected at 2,425 crores, and that will be a 2% jump on a quarter-on-quarter basis. And if we talk about the other factors at play, then from the management commentary, we will be definitely looking about the outlook on the US sales. Other than that, what are the key launches that the company is planning for in the US market, especially in the next 12 to 15 months. So all these factors we will be watching out for. Definitely a good jump on a YOY basis, but when it comes to the sequential performance, then there could be quite a stagnant or flattish growth for Sun Pharma, but on a YOY basis, good numbers expected indeed.
Alright, Shrishti, we'll keep stock of both of those stocks and how they move. But let's move on and talk about another company that's set to report its Q3 earnings, and that's FMCG company Dabur. So let's go across to Winnie to get an understanding on what the street is penciling in and the factors that we need to be watching out for when it comes to this company. Winnie, take it away.
So for Dabur, we are expecting a revenue growth of around 7% this time. Out of that, volume growth is expected to be at 3 to 4%. Overall margins also expected to be largely muted, just slight bit of an improvement there. 20.5% is the EBITDA margin expectation versus a 20% last year. Rural demand, obviously that's continuing to lag. We got that update coming in Q3 from the company as well. So yes, rural will continue to be a bit under pressure. Food and beverage segment expected to see a high single-digit growth, while HPC segment, that's the personal care segment, is expected to see a mid-single-digit growth. Now obviously slight improvement in margins is mainly because of the moderation that we're seeing coming in inflation. That will be supporting the margins. Let's keep an eye out overall in terms of the winter portfolio. How is that doing? And other than that, Badshah Masala is expected to do well, continue to do well. So let's keep an eye out on that one in terms of the volume growth that's coming from the Badshah Masala performance. Overall, rural recovery, any signs of that is a key commentary to watch out for. Update on the international business is a key factor to watch out for from Dabur as well.
Well, absolutely. Thank you so much, Winnie. We'll keep an eye on Dabur. But with this, we're timed out on this edition of Market Cafe. From me, Shriyanshi Singh, my co-anchor Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. The market takes the action forward, so stay tuned.